This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
U.S. oil output from top shale producing regions is on track to fall for a third month in a row in October to the lowest level since May 2023, the U.S. Energy Information Administration, EIA, said in its monthly drilling productivity report on Monday. U.S. oil output is expected to fall to 9.393 million barrels per day, BPD, in October from 9.433 million barrels of oil per day in September, EIA data showed. A record 9.476 million barrels of oil per day was hit in July. The estimated decline of about 40,000 barrels of oil per day would be the biggest monthly drop since December 2022.
Russia's oil and gas revenues, which account for around a third of total federal budget proceeds, are set to rise to around 733 billion rubles, $7.6 billion, in September, up 14% from the previous month, Reuters calculations showed on Tuesday. The corresponding figure in September 2022 was 688 billion rubles. The rise reflects a 24% month-on-month increase to 1.1 trillion rubles in proceeds from a mineral extraction tax, according to the calculations, based on data from industry sources and official statistics on oil and gas production, refining and supplies on domestic and international markets.
Moving on to the top news in the energy sector.
At least $14.3 million worth of coal produced in areas of Ukraine annexed by Russia has been exported to NATO member Turkey this year, according to Russian customs data reviewed by Reuters. Between February and July 2023, about 160,400 tons of coal from the annexed eastern Ukrainian regions of Donetsk and Luhansk arrived in Turkey, the data showed. 3 producers listed in the customs data confirmed to Reuters they had shipped coal from the 2 regions to Turkey during that period. Unlike the United States and European Union, Turkey has not restricted trade with Russia or the areas of Ukraine controlled by Moscow. Washington has cautioned companies not to help Russia wage war against Ukraine or circumvent sanctions.
A sudden surge in U.S. West Texas intermediate crude prices that pulled Brent higher has shut off arbitrage routes for crude from the U.S. to Europe and Asia and is preventing oil from the Atlantic Basin from heading east, traders said. The WTI price surge, driven by OPEC+ supply cuts led by Saudi Arabia and falling U.S. shale oil production, is altering global trade flows by keeping U.S. oil in the country and driving up demand and prices for other oil imported by Europe and Asia. U.S. WTI crude futures jumped more than $1 a barrel on Tuesday, pulling up Brent as well and widening prompt month spreads for both contracts in backwardation. Next, we have the top news in metal markets. Poland proposed on Monday that new European Union sanctions against Russia for its invasion of Ukraine should include a ban on Russian diamonds and liquid petroleum gas and called for aligning sanctions against Belarus with those against Moscow. In a proposal seen by Reuters, Poland is calling for banning imports of Russian diamonds, the sales of which brought the Russian budget $4.5 billion in 2021, it said, and putting individual sanctions on the Russian Alrosa Diamond Company. Alrosa has supported Russian military forces and the Russian war efforts in Ukraine, both directly and indirectly, for many years, the Polish paper said.
Copper prices extended losses on Tuesday on concern ahead of a U.S. Federal Reserve meeting that prolonged high interest rates will dampen metals demand and as inventories pile up. 3-month copper on the London Metal Exchange was down 1% at $8,278 per metric ton by 1,000 GMT, after a 0.6% decline in the previous session. While the US Fed is not expected to raise rates on Wednesday, the prospect of holding them at high levels to crush inflation has caused uncertainty in financial markets.
We will now look at the top news in the agricultural sector.
The U.S. corn harvest was 9% complete by Sunday and the soybean harvest 5% complete, government data showed on Monday, both ahead of 5-year averages. However, crop condition ratings hovered at their lowest in a decade, reflecting dry conditions in much of the Midwest. Market players have been waiting to learn more about the crops since the U.S. Department of Agriculture, USDA, on September 12 forecast that U.S. soybean production would fall to a four-year low of 4.146 billion bushels this year. Corn supplies were less of a concern after the government projected the second largest corn crop on record at 15.1 billion bushels.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.